Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, the focus of the day is Chairman Bernanke. He's going to testify in front of Congress at 10 o'clock, and, we'll see what he has to say. The comments, his prepared statements embargoed for now, and that'll probably come out. I think that comes out at 10. And then the Q&A session should be interesting. So, everybody's looking for a little bit of everything. People are talking about whether they're going to say they're going to taper off, whether they're going to, move the deadline date for selling some of this stuff. I just don't know because in the market the last couple of days has traded like they don't know. I mean, you look at these two candles. Came up and did new highs on each of these 2 days, but then we've pulled back. And I think that's just everybody hedging their bets. My concern, if you're a bear, is that the last 2 days, the bulls have been able to establish 1660 as support, very similar to how they established 1620 as support in this area. We did 3 days at 1620, and then the bulls said, well, they're not going to push it below, so let's go. And they did for another 60 handles. Now, we're doing the same thing with 1660. So I mean that's my general observation about this daily chart. There's nothing bearish about it, and a lot of the staunch bears are getting to the point where they're saying, well, the thing that isn't bearish about the thing that's bearish about the chart is that there's nothing bearish about it. Now I don't know if that necessarily is going to work when you have Chairman Bernanke with his foot on the gas all the time. The upper Bollinger Band comes in today at 85.88, so it would take a move to 1688 or so to really breach that band and get people thinking about, a reversal trade off the Bollinger Bands. So I'm looking for a very choppy trade into the 10 o'clock testimony, and then things should break in one direction or the other, but I don't think it's going to be smooth. I think it will, unless there's a real bomb in there. Unless there's a real bomb, or unless there's something in there that's really definitive, that really, really dovish, or really, really hawkish in the statement. And that's really not Bernanke's style. He's not a bomb dropper. Everybody's been waiting for years for him to drop a bomb, and he's not a bomb dropper. And if you've been listening to the Fed governors that have been speaking over the last 36 to 48 hours, you haven't been hearing a lot about taking the foot off the gas. You've been hearing a lot about doing what they need to do, and a lot about status quo. So you need to, you need to respect that. Whether you're bullish or bearish, you need to respect that. And I will leave you with this. I will say it again because I've been saying it for the last 15 sessions. This chart will not roll over until the bears can trade below the previous day's low. It will not happen. That's a function of math, but it's also a function of psychology, because it's the only thing that's going to make a dip buyer concerned. What happened yesterday? We come down, 2 days ago, we trade 59.75. What did we do yesterday? We come down and hit 1660 right on the head. Is that going to make a dip buyer cautious or confident? I think it makes them confident. So unless the bears can blow through 1660 like nobody's business, get down below 88, get into 56 and 53, then you have to be very, very prepared for another leg higher. Okay, and that's all I got. We'll see what Bernanke has to say. I'll be back tomorrow morning with another webcast. Mike Vacchi, Princetontrader.com. Trade them well, everybody.